Welcome to my daily report market analysis videos with me, Richard Perry, market analyst, on Thursday, the 2nd of January 2020. It is a brand new year and a new decade, and markets continue to run higher on the equities front. Certainly, we've seen these gains that have come pretty much through the Christmas period, really, and that's continued into the new year. Really, we saw this big sharp run higher through December on Wall Street. A little bit of a dip late December, but today we're seeing the futures rebounding once more, 0.5% higher on US futures, and that's pretty much coming through on the European markets with percent over on FTSE and the CAC. And really are still seeing this positive risk appetite. And that's coming as the markets continue to respond to that tweet from Donald Trump that suggested that 15th of January was when they were going to be signing the Phase 1 agreement of the US and China dispute trade negotiations. And that has sort of driven dollar weakness through sort of late December, but a slight rebound actually. We've seen, obviously through the Christmas period, you get low levels of volume and liquidity, and you can see some stop losses that get hit through that, and we saw the dollar moving to multi-month lows, 6-month lows actually through December, but a little bit of a retracement move may not be necessarily unexpected, and we're seeing that just creeping back in through a bit of sterling weakness today, a bit of Aussie weakness, and the US dollar just rebounding and unwinding a little bit. Gold remains strong, 1520, that burst through $1,500 and through resistance at 1518, maintaining that maintaining that move higher today, as is the move on oil as well, which is just sort of consolidating really. Had a bit of a dip in the final session of 2019, but a little bit of a rebound today, although just sort of consolidating to an extent. You can see that the Chinese yuan reflects the risk appetite improvement, strengthening against the US dollar, and little bit of, as I said, the dollar rebounding a little bit today, but nothing too decisive. What we do have in the first trading day of the month is the PMIs that come out, European PMIs this morning. Actually, the Eurozone final manufacturing PMI was a slight upward revision from the flash reading, but still down on November. Again, similar sort of story with the UK final manufacturing PMI, down from November, 47.5. So still manufacturing not looking all that pleasant in Europe. But whether that signals a slight, I mean, if you look across the PMIs, in fact the countries are pretty much across the board still struggling, but whether the service sector PMIs are reflecting that, we'll see in a couple of days. But what we do also have today is the US weekly jobless claims at 1:30, and they are expected to hit 225, so up slightly from the 222 that we saw in the last week of December. Okay, so that takes me on to my chart of the day, which is the dollar Canadian. And now what we saw is, as I said, a big move against the US dollar late December. That sharp move down actually coming as the oil price was pretty strong, and that helped the Canadian dollar against the US certainly. Decisive downside break below 130 big figure. Now that 130 big figure, if I zoom out, you can see that the implications of that is a really strong downside move. Opens the October 2018 low, 2780, but breaking all this old key floor, 1315 to 1335, 31 figure, all that sort of basically 100 pips worth of old overhead supply now coming back in as resistance. So if you do start to see an unwinding move where you've got the RSI 26, that's pretty stretched on dollar Canadian. You can see that it very rarely gets to this sort of level. So pretty stretched on that RSI. You might see a bit of an unwinding move, but I think more overly it sort of reflects that you're going to see a weaker dollar in broad terms, and then rallies being sold into. Certainly on dollar Canadian, you'd say that there's a resistance zone between 30 figure, 31 big figure, and any unwinding move back into that area, I think that would be a pretty decent selling opportunity now. You can see the resistance of this little downtrend coming in, but also all the moving averages falling away, momentum indicators very much negatively configured now. So any unwinding move that helps to renew downside potential, I think would be an opportunity for selling dollar Canadian. You can see here on the hourly chart, 130 big figure this morning and yesterday coming in as a basis of resistance, but yeah, there's a negative configuration now across momentum indicators, and rallies are a chance to sell. Renewed selling pressure below 29.50, if I can get my crosshair on it, 29.50 area, would reopen the downside move. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.